This is the Business to Human podcast. The purpose of this is for us to have conversations with marketing leaders like yourself, who are dealing with myriad challenges, just all kinds of different challenges in the world. And I think to get started, I would want to start out by you just telling us who you are
Sure.
and who tell us a little bit about First South as well.
Absolutely. Well, thank you very much for having me. I appreciate it. Really appreciate your time, Matthew, and thank you. I am DeLynn Byars. I am the Senior Vice President of Marketing at First South Financial Credit Union. We are a 65-year-old credit union. We were founded in 1957, approximately 800, about 800 million in assets, 120 something employees. Um, We primarily operate in the Memphis, Tennessee area, but we have branches as far north as Nashville and as far south as northern Mississippi. So we have 18 total, counting our corporate headquarters.
And for
And
those that are not really in the banking or credit union
sure.
space, as they're listening to you talk about that, where does that put you guys? I sort of think of you as definitely regional,
Yes.
sort of in the medium to small size, or a little bit.
Probably
Is that about
probably
right?
medium to medium large. When
Okay.
we The Economist will, our CEO always likes to tell us, Dr. Craig Israel will tell us that the Economist tends to look at credit unions based on assets,
Okay.
as well as, but we'll also take a look at, I'm sorry, we'll take a look at financial institution based on capital, not assets.
Okay.
So
Got
if
it.
you look at the Memphis, Tennessee, kind of the metro banking area, if you look at us based on capital, we would be the largest financial institution in our community area based on capital.
Oh
We would
wow.
be
Okay.
the third largest based on deposits.
Okay.
We do rank among the top 1% of all financial institutions nationwide for strength and stability. So we're probably
Nice.
one of the strongest and most stable credit unions that you will find.
Right. So clearly, lots of different ways to measure
Exactly.
size
Yes.
and scope. So
Yes,
that's
for
clear. That's good.
sure. Definitely.
Absolutely. Very good. Very good. So with that, the niche that you guys play in, the specific spot that you fit. What are some of those big challenges that you're in a marketing role there? You're leading marketing for the credit union. What are some of those marketing challenges that you're having to deal with right now?
I would say for the credit union as a whole, and but probably what all financial institutions would say is that, it's being able to reach those very specific target markets with your messages, the right message at the right time in the right place. But I think additionally, what we're also finding is with the right amount of frequency, because it used to be, I've been with the credit union for 26 years. Yes, 26 years.
Mhm.
I started when I was 5. No, I'm just kidding. Just kidding.
Of
But
course.
child labor laws, who cares?
That's
But
right. That's right.
for a lot of times it was like if we needed mortgage volume, you would run a print ad in the paper, and about the second or third time you ran your ad with your rate, the phone would start to ring, people would
Gotcha.
start walking in to apply. Well, now with all the noise and with all the in every single communication channel that you use, email, text messaging, push notifications, even television ads, outdoor. If you think about it, we've gone from single billboards to, digital billboards that will flip to 6 to 8 messages. So someone
Mhm.
might see part of your message enough to go, oh, wow, that was a great rate, or wow, they do mortgages, but I don't remember who it was. So I would say for the credit union as a whole, for us being, not the largest player in the market and not
Mhm.
having unlimited budget,
Right.
is really being able to fine tune and focus our messages to make sure they produce the greatest results for the credit union.
Right.
And specifically for, I guess, me within the credit union, I'm actually a department of one.
Right. Right.
Have a myriad of vendors on which I rely, and a myriad
Yes.
of software tools, and and support from other staff, to be sure. But in addition to, so for me, it's being a department of one, and then someone who's also been asked to lead some other initiatives that are not what would fall strictly within the marketing wheelhouse. Like I'm
Right.
helping out with enhancements for digital banking. I'm helping out with our CDFI certification. I'm helping out with, most field of membership issues kind of fall under my area, to me, to
Mhm.
help guide. So
Yeah.
I would have to say, at least for First South, probably personally, sometimes it can be pretty much it's a bandwidth issue.
Yeah, and one of the things I remember from our conversation a little bit ago that was sort of impressed in my mind was you are a team of one, but as you describe what you're doing as an organization for marketing, it's a pretty sophisticated marketing mix, a pretty sophisticated marketing set that you're doing,
Yes.
and obviously you're leaning on partners. But how are you going from a person, you're one person, how are you extending that out to some of
Sure,
these others?
sure. We rely on several vendors that help us with our marketing automation, that also help us with our social media outreach. Of course, a lot of our production and placement that lies with our ad agency. They help us update our website. They help us update. Uh, they help us, manage our online reputation management. They help us manage our social media channels. We have a platform that the staff can use to push out messages via social media, and they help us manage that. So there's a lot of that going on. A lot, we have a very aggressive lending department. We have a pretty good sales culture, which is a big help. But one of the things we found is, and we've talked about this in the kind of the discovery call, was that we do a lot of indirect volume. And that's a challenge not only for us, but also I know for any financial institution that plays in that space, that participates in that space. It's always a challenge because these what we mean by indirect members is that they have gotten their auto loan with us at the dealership. So the dealership has handled the entire transaction pretty much for the person buying the vehicle. So there's not that sort of direct connection or that
They've not
mindset.
made a
It's like they
choice.
didn't choose us necessarily. They
Yes,
chose
yeah,
us, but they chose us because we gave them the rate they
right,
wanted, or we could make their payment work, or
got it.
we were able
Yeah.
to work with the F&I person to make the
And
deal work. Maybe when another financial institution wouldn't. So
one point of clarity for me,
sure,
these indirect, you talked about these indirect members that are coming
yes,
through like a loan. You've acquired them as a loan, as part of a loan process. You use the example of a car dealership. Is this? I imagine it's bigger than just car dealerships, right? I mean, there are other indirect ways into the
there are. It could
franchise.
be boats, power sports, RVs. Um, uh, I thought of another one and it just escaped me. But typically, if it's we don't do so much like on the commercial side, and you could probably there are I know credit unions and banks that do commercial indirect lending, so it could be fleets of trucks or things like that. But basically, if it's some sort of vehicle dealership, generally that's what when you talk to any financial institution about their indirect business, it's auto loans, truck dealerships, power sports, boats, RVs, motorcycles, those type of loans.
Relatively, how big of an opportunity is this for the credit union for you guys?
It can be huge. Last
Okay,
month we did, and I think I can say this, but we did probably it was one of our biggest months ever, and we did about $10 million.
okay,
For us, that's
yeah,
large. Now you have
right.
other
No,
credit unions
I
that
get
might
you.
do 10 times that, but for us, $10 million in indirect was a big
And
month.
this ranks, I remember you telling me it ranks as one of your, I don't remember, top two or three, something like that, is really
Yes.
kind of revenue producers for
For
the credit
sure,
union.
for sure.
Okay.
Because, like I said, because the way you price your program, it will determine obviously what kind of yield you get. So we are up, and I didn't mention this in our discovery call, but we've also put some tools in place to help us buy a little bit deeper. But typically, we are a very conservative lender. So the reason why someone may hear, "Oh, you only did 10 million," it's like, but it's also $10 million in the vast majority of it was like A paper
Right,
or
right,
B
right.
plus paper. So very high tier credit score,
Yes.
720, 740 or higher. So for us to do that kind of volume with that level of credit quality is a big deal for us. And it definitely, like I said, is probably one of our biggest ongoing challenges for sure. And any bank or credit union marketer that has any kind of indirect program, whether it's loans, credit cards, whatever it is, I think they would all say it's a big challenge because, like I said, they don't have that sort of direct connection. Like they didn't go to your website and apply. They didn't walk into a branch and apply. Um, they didn't go in with a pre-approval offer necessarily from us and go, "Oh, hey, Mr. Finance guy, I want to do my loan through First South Financial." They don't. That's like the F&I guy goes, "Here's what your rate's going to be. Here's your payment. Oh, and by the way, your loan's with First South Financial." And they're like, "Who? Great. Okay,
Yeah,
fine."
sure. Yeah.
Do
And to
they
put
have branches here? I don't
yeah,
know.
yeah. And to put, make sure we put the fine point for those that are listening, the fine point on the challenge here. These indirect customers, indirect members for you are a great opportunity, great revenue, good way to hit your numbers, for your internal goals.
Absolutely.
So they're good in that way, but they do represent a marketing challenge because, like you suggested, these are not necessarily maybe the most loyal members or the people who could be using more of the bank, or excuse me, the
Exactly.
credit union. Could you describe that a little bit? I mean, yes, they didn't
Sure.
choose you, but why is that a problem, and why is that an obstacle for them or you?
Really, it's a lack of knowledge. Like I said, they didn't research us. They didn't come to us first and go, I'm shopping for a car. Can I get pre-approved? So they just don't have I guess the best way to put it, they don't have the relationship. And it's not a necessarily a conscious choice on the part of the consumer to go, oh yeah, I know First South Financial. They're great. Some of them do, don't get me wrong, and they're very happy when they find out they got their loan with us. But for us, it was just like, okay, the rate's good, the term's good, the payment's what I wanted. Fantastic. So there's not that relationship with us that other borrowers or other members have with us, because it's not that conscious choice that they have made. The F&I guy pretty much has made the decision. A lot of times, has not made the decision, but has made the recommendation. This is the best rate. This is the best payment. This is the best deal I can get you. Go with this. Go with this lender. We've all been there
Right.
when we bought a car.
Of course, yeah, 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 yeah.
Yeah, no
But
difference.
you guys are tackling the. I mean, I say
We
you
are.
guys, you are tackling this pretty head on,
It
and
is. It is.
so
It
how
is a
are you?
team effort, to be
Yeah,
sure. Like
of
I said,
course, yeah,
our good sale. We're very lucky that we have a good sales
sure,
culture. We have some people we have a good incentive program in place, which is a
hmm
big part of why we have a good sales culture.
yes.
Not that we're paying for,
No, I got you.
we're not. I mean, and I'm not bad, but we're not Wells Fargo, so there's not a like of that going on. But I was an outside salesperson myself, and I can tell you, before coming to the credit union, it's like there needs to be a good, honest incentive program in place if you want to implement that kind of sales culture. And we've taken years to grow that. So, what we're trying to do with our indirect members is through our onboarding, which is handled through our marketing automation platform. They actually go on a very different sequence than, say, someone who joined at a branch, or someone who joined at an event we were at, or someone who joined through even our online account opening process. So
And
we
what are you trying to that onboarding process for
Mhm.
these indirect accounts? What are you trying to get them to do that they, like you suggested, aren't naturally doing because they didn't
Sure.
choose you?
Part of it is just really basically brand awareness. It's like, hi,
Okay.
congratulations, your
Yes.
loan is with us.
Yes.
Number one, here's all the ways you can make your payment. And first and foremost, here's the information you need to make your payment. Then here's all the ways you can make your payment. Online banking, mobile banking, external transfer from an existing account you have somewhere, pay by credit card, pay by phone. Making them aware of all those very options. After that, what we did and what we found, and we have had a really good partner that helped us work through the journey maps on this, is to go, checking is probably not the next best product to try and offer an indirect member. What we have found is that they will what we have found is probably putting another credit product in their hands, at least for us, has been the way to go. So you got a loan, why not get a credit card? Or someone notices on the credit report, great, you financed this with us. You also have this vehicle financed with XYZ. Let us take a look and see if we can save you any money by refinancing that auto loan for you
hmm
as well. Or you've got a boat or an RV, or you're getting ready to buy a car for your son or your daughter or whatever. Well, hey, come to us. Pre-approval would be very easy for you in this respect. So that's what we're finding. Do you need investment? Because of the credit quality of these folks, we find that probably not talking about a fresh start credit card is really
Right.
what these folks need.
hmm
But would they want to know about our titanium edge with
Sure.
uh, earn 3 times points for gas and groceries, or 3 times points during the last 3 months of the year on retail purchases? Absolutely. Would that be something that would interest them? And that's what we found, and we've based that on the data we've been able to collect back on what we've been able to see how these campaigns have performed, and then taking a look at sort of our halo effect of, okay, these are our indirect members. What have they say take 6 months worth? Okay, these people open the first half of the year. Now let's look at them the last half of the year and see what they look like. And then we also did some things with our vendor to go, let's hold out a control group. So they got none of the marketing and see what they did. And what we found is with any of our onboarding campaigns where we had, or any of our automated campaigns where we had a control group in place, the folks that got the messaging did more, did it faster, and we cemented those relationships and they stayed members longer, even sometimes past when the auto loan paid off or they traded it in or something like that. So
Gotcha. And that's how you were able to figure out pretty quickly that the next best product is not a checking account. It's that because of that
it
testing
was,
you're talking about.
and it was one of those things. It was like there were many people that were convinced it was, and you basically just had to, I just basically had to kind of basically go, it's, I don't think it will be, but let's see what the data shows. And so when we ran it, and we ran it and ran it and ran it and varied the offers and made them very lucrative, and was paying way over market what we
Yeah.
would pay for a checking
Gotcha.
account, just
Got
generally.
it. Yeah.
Um, and paying for that new account acquisition, paying way over market for what we would, and not getting the results we wanted, then that's when we went, okay, it's obviously not the offer, because we had members in other channels that were getting fewer offer, that were not getting the offer the indirect members were, and were jumping on it, and these indirect members weren't. So we kind of went, there's kind of our answer, at least for us.
Right. Yeah.
Every financial institution is
Absolutely.
different.
For sure.
Some may find it. What we have found, it's interesting because we haven't done CD specials in years, but we started running some CD specials, and now what we found is actually our indirect members, they may not want a checking account with us, but they'll come open a $20,000 minimum, deposit CD with us to get a better rate. So what we have found for us is maybe not checking, but also too, because with checking, there's always that stigma that if I've got automatic deposits, if I've got automatic withdrawals, that's just a pain in the butt to move. It's really not these days, but there's that perception of when you had to fill out, paper direct deposit forms, and that's still in the mind of a lot of folks. But for us, that's what we found. But offering them a good rate on a CD, we found we've actually had some indirect members bite on that. This is relatively new. Like I said, we haven't run a CD special since 2017, 2018, something like
Yeah.
that. So it's been a few years.
I hear you. Yeah.
And so
Well,
that's something we'll keep watching and see if we need to adjust our journey maps.
now one
Do we
thing,
make
one,
a CD special that's just for indirect members and see how that one performs? So
right, right. One thing that strikes me as we're talking here, you're talking again, just the nature of our conversations. I'm
sure.
not trying to hold you to this, but you're talking in terms of a little bit of generalities that most of these indirects are this way or that way. But are you, and I don't think we've talked about this, but I'm wondering, do you do some segmentation of those even of your indirect customers, some sub segmentation of them?
We do in the analysis, but we haven't as far as the onboarding goes, because typically what happens is with an onboarding, because that's when in their new member phase. And what we did do with all of our onboarding programs was we increased the time frame to where it runs 10 to 12 months, versus when everyone first started doing onboarding, it was like 90 days and you're out. And then it went to 6 months, and then some went to 9. And some still run 6, some still run 9. What our vendor and some other vendors that we have talked to about onboarding programs in general, honestly, because harkening back earlier to the noise, but I just, as funny thing is, between when we had the call and then this other one, I got a report from my automation vendor on our emails. And our emails, especially in indirect market, are getting way above average open rates.
Oh wow, that's great.
So while people are like, email's dead,
Yeah,
no one reads their email, our indirect members
it's
do,
perfect.
which
Yeah,
is great. So it's
yeah,
been a good thing. But that's what we found is we need that frequency. They need to get that credit card message via email 3, 4 times, and then maybe they'll jump. What we did for segmentation as far as analysis goes is what I do is I produce a product and service penetration report, and we take a look at indirect members by year. And what we find is, and it tends to run the length of the auto loan. It used to be, auto loans, folks would trade in about every 2.5, 3 years. So you might have 24 to 30 months on an auto loan, and then folks would start to turn. COVID has kind of skewed that quite a good bit, and also too when car prices started going up even before COVID. The average age of vehicles has gotten longer. So folks aren't, or they're trading and they're not getting something brand new. They're trading and they're maybe getting something that's 2 model years old or a model year old. But what we found is, for us, we had a sweet spot of where the product and service penetration for, say, and we track all the way back to our 2015 indirect members. And what we found is the first 18-20 months, we can push up that level, and quite substantially, sometimes like by two, maybe three additional products. And we'll push it up, and then it'll level for about 9 to 12 months, and then it starts to drop back off. Typically, now what we're finding is either the loan's paid off and they went to the dealership again, and the dealership didn't recommend us, or they chose not to deal with us, or whatever, or like I said, or somebody undercut us on price, or you have a manufacturer that's offering, a lot of times that manufacturer financing is the 0%, but typically that's only for 36 months or so forth. But something like that catches somebody's eye, and then we lose them on the loan, and then what we find is we kind of lose them.
The other products go as
The
well.
other products then will tend to either fade off, or like if we've refinanced another auto loan with them, they paid off their first, because we still classify them as an indirect member, even though the indirect loan might be gone. So
Yes,
that's an important
I understand.
criteria.
Yeah,
They don't get converted like to general membership once they don't get converted to a different membership type, so that we can do this type of analysis. That was one of the reasons we
right,
decided, if you came in indirect, we want to be able to tell you're an indirect member. Same way we have a
right.
branch on the University of Memphis campus, and those folks have a different membership type, so that we
So
can
you can
very
watch that.
easily track what
Yeah.
they're doing by pulling reports based on nothing but the membership type.
Well, you're doing. I mean, just using the word analysis. I mean, launching off that, you guys are doing, based on what you're talking about, some pretty detailed analysis, making sure you understand how each customer set is operating. But I know that that's not as perfect as you want it to be.
No,
There's some stuff missing from that.
not by any
Yes.
stretch.
So can you talk about that just a little bit?
Sure, sure.
What's missing from that to allow you to really do the analysis that you want to be able to do?
I think the hard part is for us, and I actually sat in on a webinar today, and they talked about doing some cross domain tracking. So two sides of the coin. For us, and I think and other financial institutions face this too. It's like, if you don't really have a good handle on your funnel of how they came in. Now we do based on like the channel, like they came in via indirect, or they came in via, you know, uh, online account opening, or they came in via an on-site event that we were at, working with one of our member companies or something like that. We're good there. What's hard too is, like, once you get them in, and even with indirect, it's like, well, what do they have with other financial institutions? So that's a piece you don't necessarily know, or can
Your
get your hands on.
competition,
Right.
essentially. Yeah.
Can you? I don't know where they have their checking account, unless they're doing an ACH transfer for their payment, say from Regions or somebody else. But mining that data when it's sitting in the core, that also gets tough if you don't have like a data warehouse, and we don't. So we don't have like one place where, like, all the data from our credit card vendor, and all the data from the core, and all the marketing data that the demographics and the psychographics that I can I can apply that in one platform, but I don't have an easy way either for me to go, okay, let's take all the data from the core, which a lot of it is transactional data. Let me layer on some other stuff. Let me get some other information I could get, demographics, psychographics, to help me figure out more where they are in their life cycle, their financial life cycle, um, and have that all in one place, like a big repository, basically, where I could then go in and go pull reports and slice it and dice it. Lending wants to see the yield. The CFO, everybody wants to see the yield. They want to see the numbers. They want to see the ROI on the campaigns that we run. You can do it to a certain degree, but it's still a little bit broken, and especially even like, okay, how do we get them in through the funnel? What did that really cost us? You know, um, we take a look at our Google AdWord campaigns, like from clicks and conversions, but still, I think it's a little bit broken to go. This person saw our ad, clicked on our loan application.
Mhm.
We're working on it, and we're hoping with our new loan origination system we can put a few more pieces of this puzzle together. And then also with a website redesign, we're
Hmm.
hoping we can kind of put these broken pieces together. For you clicked on this ad, you
Right.
came to our website, you looked around on our auto loan page, you then went to the application. Now we can track you all the way through the application. Where did you fall out if you did complete it? So we can do some abandoned shopping cart marketing to you. You completed your loan. Great. Okay. Now that flows into the automation system, and now you get put on your onboarding track. And then once you get through onboarding, then what other marketing campaigns do you qualify for now
Yes.
that you would now fall on? So
Right. But that
it's
attribution piece in the middle is kind of
and it's hard, and it's
not
hard
as
for
precise as it could be.
no,
Yeah.
and I
Yeah.
don't know that it ever will be, but I know it
Sure.
can be better. So that's one
Gotcha.
that's one of my goals for next year is to, I can tell you how a campaign is doing, but can I tell you that Matthew Tilley came to us off this Facebook ad that we ran in the Jackson,
Right.
Tennessee market? Some of it will never be that precise. Some of it can be more,
Can.
but I know I can get there's better ways to get at that to make sure that where we are running, especially in the
Yep.
digital world, just to make sure that where we're running everything is actually as effective as it could be.
Right, right. Now, I recognize, and you even alluded to, you've got a whole range of marketing issues and challenges that you're dealing with. We dug in on the indirect
Yes.
customers specifically, which was good and interesting on its own. But what I'm curious about is, does this indirect the problem, if you will, of indirect customers and converting them to be more, multi product customers,
Mhm.
is that on the marketing plans for the coming year, or does it get bumped down in priority? Where does it fit into your
It
future
always
plans?
stays on our radar because increasing our product and service penetration is always it's not necessarily part of the strategic plan, so to speak, but we do, I guess, it would fall more in the tactical part, so it may not be like a big goal, but in overall, like the overall goal may be deepening member relationships, which is still
Right.
kind of a broad goal. But
And this is
then
one strategy to do
part of it
that.
we take a look at, so what can we do, okay, so here's our different segments, how we slice and dice our membership. Here's the indirect members, here's the ones that came in through OAO, here are our borrowers, here are our savers, here are our spenders. What do we do with the way we have broken up? Here are the members that we have that, because similarly, if you're a big mortgage shop, and we're a decent sized mortgage shop, but like with indirect, you have members that flow through you to get their mortgage loan, and then you sell the loan, so you don't even have the loan anymore. So even beyond indirect becomes the members that got sold on the secondary market, and you've got to be sure that your CRM, or your marketing automation platform, your customer relationship management platform, or your automation platform, that there's data flowing into that you can still market to those folks, because now you don't even have the mortgage anymore. And if you didn't make them a member of the credit union, which is something we have really worked with our mortgage staff, and they're great about doing it, is just that even if we're going to sell the loan on the secondary market, they're going to we fund it, but it's like you're going to have your membership account with us. And because at least that way, I've got name, phone number, email address, mailing address. Um, if I can do direct mail, and that's another thing. It's like direct mail. That's one of the hardest things ever to try and gauge response on. But it can be effective. But the problem is, like everything else, it used to be you might could send out one postcard and you'd get enough loans. But now, I mean, think about how many times it's like with credit cards. Think about how many times the different major credit card companies show up in your inbox. And then think about that's probably $2.50 to $3 a piece for that one piece that they sent to you. And then know that they've sent it to thousands, if not hundreds of thousands. So maybe it doesn't cost them $2 to $3, but
Right.
still,
Sure, 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 sure. No, I get
you
it. Well,
think
and
that's
you're working
always
within a specific geographic region too, so
yeah,
that definitely limits
right.
your scale, right? So I get that.
Well, the good thing for us is, and we would want to anyway, because what we have found, which was not necessarily related to indirect, which indirect is kind of the anomaly, like if the rate, like if we're working with an RV dealer, say in Jackson, Tennessee, I'm just going to use this as an example, an RV dealer in Jackson, Tennessee, but the person buying the RV lives in Indiana, but the Jackson, Tennessee dealership was the only one that had it. Say they don't really care. That's the other thing. It's like they don't care. It's like I don't care that you have branches nearby. I don't care. I just need to know where I need to mail my loan payment. And I'm going to come down to Jackson and sign the papers, and I'm going to drive my RV or pull it back to Indiana. I don't care. And we have ways to qualify members for that, so that if you live in Indiana and you want to get your auto loan through us, perfect. We can
Yeah.
handle that.
Right. Right. But you're
But
probably not reaching out to Indiana
right,
proactively
exactly.
in your
But what
marketing
we
efforts.
found with other types of membership, and even when people are always like, "Oh, well, Gen Z, they want to do everything online." They do until they have a problem or they have an issue, and then, or even some places, it's like, well, rural areas. It's like, well, rural areas, they have to do stuff remotely. They have to doesn't mean they want to, because we had a market we were trying to penetrate for years, and until we opened a branch, could make no progress in that market, and spent good money doing it. I mean, good lucrative offers, good rates. This is back when we were doing CD promotions, good CD rates, paying way above market for checking, all that. And the only thing we could figure out, because we were running this, so what we did is we ran it in another market, very similar, characteristics to this other market, but we had a branch. And we were killing it in that market where we had the branch. And the one where we didn't, we couldn't make headway. And that's when we finally had to turn around, our COO and I and our EVP, and turn around to the CEO and go, this is a wonderful plan and we don't disagree with it. But, and this was also several years ago. So thanks to COVID, folks' attitude toward technology has changed. It might be a little bit different now. We might get a little bit more traction, and we're actually getting ready to test that out in a market. But what we found in that one was that if something very psychological about, if we didn't have a physical location, even though they never wanted to go in it, something about having that brick and mortar presence made the difference. Because then once we opened a branch in that market, things took off. Accounts started to open, loans started to flow in, and before it was like we had some relationships with dealerships in that market, and that was great, and we were getting the indirect loans in,
Yeah.
but we weren't
It's
opening.
interesting. There's a parallel in the retail space as well, where there's the e-commerce will happen, but it gets even better if you've got a brick and mortar location in those areas. So
Exactly.
for those metro areas, it's a psychological thing that we have, even if we never want to walk in the door. Just the fact that it's
Exactly.
there.
And I
Yeah,
laugh about that because
yeah,
I work for a financial institution, but I cannot
yeah.
tell you the last time I went into a branch to do a transaction. No
I
one
hear
in the
you.
branch network, other than seeing my
Yeah,
picture on the internet, knows who I am,
that's
because
right.
I am never in the branch.
That's funny.
Never want
Yeah,
to be, never have to be.
yeah.
But so people go, oh, so it's digital banking or branches, and you just have to look at them and go, yes,
Yes, that's
it's
all of the
still
above.
both. Well,
Yes.
ATM machines are over 50 years old now, and when
Mhm.
they first came out, like by the 80s, it was like it's going to be completely cashless society.
Right.
No,
Yeah.
it's like
Not so much. Yeah.
COVID actually did more to that
Sort of
than
amplified that effort,
than debit
that
cards
trend.
and than debit or credit ever did,
Hmm.
and
Yeah.
checks. I mean,
Yeah.
and checks are still going by the way, but I mean they're going down, but they're still being used. So
Yeah. Well, DeLynn, for the last few minutes, I'd like to
sure,
turn the conversation just to some broader topics. So we've been talking very specifically about some of the challenges you've been working on, but I want to turn you into an advice guru for just a second, and there's a couple of questions
master
I
of
want
all
to.
trades. Yeah, jack of all trades, master of none.
There
Yeah,
you
that
go.
was
There you
okay,
go.
but
That's
fair
it.
enough.
That's it. So the first question is a little broad, but just curious in your, whether it's something you're working on now or something you've dealt with in the past. But you do lean on a lot of vendors and a lot of software systems and tools and things to do the marketing you do. What's missing from that toolkit that either you have or maybe even in the whole ecosystem that's just not there? That if we could, go out and wave a wand and make it happen, what is that thing that's missing to help you solve some of the marketing challenges that you're having there at the credit union?
I would say for me, at least, it's, and like I said, the funny thing is, the Marketing Association of Credit Unions, which I'm a board member on, actually did a webinar on this today. it's you've got the data. Now, what do you do with it? So I think it comes to a point. A couple of things. One, we would everyone should have like a data warehouse. So if I was going to wave my magic wand, it would be like, here's a data warehouse, and guess what? The data from every single vendor, and especially like, like your debit card vendor, your credit card vendor, your online banking vendor, your core, your your LOSs, for mortgage or consumer or commercial, whatever platforms you have, that there's this one very simple interface, or this one wonderfully perfectly working API that would plug all the data in that you want, with one very easy to use interface, where sales could go pull the reports they need, marketing could go pull the reports they need. I could very easily create marketing dashboards or operational dashboards or things like that. And there are several vendors that are getting a long way toward this.
Sure, sure.
But to me, that would be the one thing, like the one platform that, not necessarily one size fits all, but that you could make it fit your organization the way you need it to do. And I don't know of anyone that does that well for both the data that you already have and then the data that you want to have on folks, like prospects as well as your membership base. You know, there are some that do really good with, there are some website vendors that do great jobs building, helping you build out funnels and understanding your analytics. But then I think sometimes getting that analytics through to, like you said, I don't know that I would ever know this, but I would like to know, like I said, Matthew Tilley clicked on this ad, came to our website, went to these pages, went to the loan application, and then opened a loan with us. Boom.
Yes. Well,
So,
and it sounds like knowing it is problem one. So I don't know it first of all, but then once I
right,
do know it, executing on it, doing something with that,
for
whether it's
sure. And then
remarketing or
also,
whatever.
right. And then knowing that you've got 14 bajillion, because going through the implementation with our CRM, we turned on pretty much every field in the core and shipped it into and shipped it into the CRM, which is great in some respects, but then when it comes to building out the journey maps and all that. So I think being selective with your data, and more data is not always good data. More is not better sometimes. It's like, if we, looking back on that project, one thing I would do over, and the next time we implement a CRM, because we will have to, um, just as we grow and mature, you have to change vendors to best suit your needs, is to be more selective about the data that we have flowing in, so that it's more manageable and easier to handle. And then also having other types of data flow in there as well, that, if the platform will allow for it, will allow you to do some campaign analysis, some campaign costing, and all that. I can do that now, but it's in like three different platforms, and the three platforms don't talk to each other. So I can pull part of it from here, part of it from here, part of it from someplace else, and then I'm putting it together in Excel. So,
Gotcha, gotcha. Okay. Okay. Well, good. The last question
sure.
is there anything that you want to pitch or promote? We've got some folks listening to this. May not be in your region, but is there anything that
Sure.
we should be looking for, calls that maybe that you're behind? Just any, this sort of an open door for you to
Oh, well, thank you.
do a pitch for anything you want us to hear about.
Two things real quickly.
Yeah.
First of all, being a credit union marketer, if there are any other credit union marketers out there listening to this podcast or viewing this podcast, I would say, if you are not a member of the Marketing Association of Credit Unions, or MAC, please check that out. It's at macnetwork.org. Um, we are an almost 40-year-old professional development association. We have a wonderful conference coming up in Nashville, Tennessee in May. So check out those details. And also, if you are companies wanting to get in touch with credit union marketers that are listening to or watching this, please, also visit the same thing. We really work hard to make our corporate partners, provide good value, not only for our members but also for our associate members as well. On a personal note, I have to say, if anyone gets a chance, go check out midsouhtherapydogs.org. I volunteer with this group. It's called Mid South Therapy Dogs and Friends. I've been volunteering since 2010, and I am a team with my Australian Shepherd mix, Archer. So we are a therapy team, and we go visit hospitals. We visit a local hospice. We do special events. Archer will come here. We go see our member service staff and our rest management staff. I was a team previously with a Husky mix of mine, and he passed away, but I'm a team with Archer. And then I'm also in training with my Great Pyrenees Border Collie mix, Isabel, to become a team. And so, but it's just a neat organization. If you want to, our motto is not all medicine comes in a bottle. Just a lot of great pictures. So if you're a dog lover and you want to see dogs doing good out in the community, if you want to see a picture of our therapy miniature donkey, we
Oh,
have one
wow.
of those.
You'll
Her
have
name
to
is
send me a picture of, is it Archie, you said?
Archer. Yes,
Archer. You have to send me a picture of Archer. And
I
then you
will
said,
absolutely. Hang on, I may
what's
have a
is it Isabel? Was the other dog?
Isabel. Actually, I will, but this is when we go on visits, and I'll
Yeah.
hold this up so if you can
Oh,
see. So
nice. I
Archer
see
has a
him.
trading card.
Oh, that's so cool. Yeah.
I know. So front and back, and so the back
Oh,
is like
nice.
so it's little stats. It's almost like a baseball card. It's like
Yeah, yeah,
his
yeah.
picture on the front, and stats on the back, like
That's pretty
how long he's been
awesome.
a team, what he is. But yeah, I'll send you pictures of Archer and
Yeah.
Isabel and Luke, who I was a
Okay,
team
great.
member with as well. But
Okay,
it's
great.
just it's a great way to volunteer. It's a great way to give back. But our
Yeah.
theme, our motto is not all medicine comes in a bottle.
Yeah.
Um, and then we had a team that actually we had a therapy llama at one point in time, Pearl
Really?
Emily. So if you would
Oh,
like to see a picture of a therapy llama, you
that's
can
so cool.
you can go check out that website. If you want to
Yeah,
donate, there's a
sure.
donate button, but just nothing else. If
Yeah,
you just want to see a bunch of
check it
pictures of
out.
cute dogs
All right.
doing an awful lot of good work out in the community, it's
Yeah,
a fun website to go visit. There's virtual therapy dog visit videos out there on our site, so
that's pretty
give it a
awesome.
look.
Absolutely. Well, thank you for that, DeLynn. And I really
Sure.
appreciate you taking the time to spend this time with
Oh,
me. And
absolutely.
I,
I hope it was beneficial. I hope it was informative. Hope folks have things they can walk away from this with. So
absolutely, absolutely. Well, thank you so much.